Welcome. In this video, where can Xn coin turn upwards? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable technical developments on the chart is how the Fibonacci retracement levels from the bottom to the top align with the price action. Especially in this type of analysis, the retracement ratios that traders often follow provide important clues as to what direction the price will take in the future. In the current structure, the price has been remarkably respecting the Fibonacci levels and is now making an approach towards the critical 0,786 level. This level is very meaningful both from a technical point of view and from a trader psychology point of view. Because for many traders, the 0,786 level is considered as the area where the correction could end and the price could regain upward momentum. A move towards this level could set the stage for a possible reversal scenario. Looking at the previous reactions, it can be seen that the price often rebounds to the upside from such deep Fibonacci retracement zones. One of the main reasons for this is that these levels often work as strong support zones. Long-term traders, especially in the market, are known to consider such deep corrections as buying opportunities. Therefore, an increase in volume at levels such as 0,786 may signal that buyers may regain strength in the market. In addition, the controlled approach of the price towards this level is also a positive signal, because a gradual pullback, rather than a sudden and sharp decline, indicates that the market is making a healthy correction and sellers are not overly aggressive. Such slow and balanced pullbacks ensure that subsequent rises are based on solid fundamentals. This creates a reassuring outlook for investors. If the price reacts upwards from 0,786, this could be interpreted technically as a reversal from the deep correction, and such reversals can often open the door to strong bullish moves. In Fibonacci analysis, the 0,786 level is often seen as the last stronghold. So, if the price doesn't break below this level, it's likely that the current downtrend has ended and the ground is set for a new uptrend to begin. Rising prices, especially after this level, boost investors' confidence and lead to more capital inflows into the market. This sets the stage for prices to rise more decisively and quickly. Therefore, the price approaching the 0,786 level is a technical development that should be carefully monitored, and a possible bounce from this level could have great potential. There is also a high probability that a rally from this level will continue until the next resistance points. The Fibonacci levels of 0,618, 0,382 could be gradually targeted after this point. This would mean that the price would embark on a journey back towards its old highs. In such a scenario, investors' confidence would increase, trading volume would rise, and a mood of optimism would prevail across the market. All these dynamics ensure a sustainable rise in prices and create a strong bullish bias in the market. Psychologically, the 0,786 levels are also important because many investors consider this level as a last chance. This increases the likelihood that the price will encounter strong support at this point. In technical analysis, the fact that the price reacts strongly upwards after such a deep correction is one of the clearest indicators that the market is experiencing a turnaround. Therefore, positive reactions from the 0,786 level may encourage traders to buy, which may allow the price to re-enter its upward channel. In conclusion, the current technical picture is very promising. The Fibonacci retracement from the bottom to the top, and the fact that the price is coming towards the 0,786 level, and this level is about to be tested, shows that we are on the verge of a potential turnaround. But we cannot decide the analysis only with the pattern. Let's look at the other metrics. Keep watching. One of the notable elements on the chart is the strong support zone just below the price. This area coincides with an important technical level that has worked repeatedly in previous price action, indicating that the market is full of buyers. This support line in particular is highlighted by a red color, making it clear enough for the technical analysis eye to easily spot. Traders usually have a lot of confidence in such clear and visually prominent support areas. This is because these levels are historically known as areas where buyers re-engage, driving the price upwards. The fact that the price is currently approaching this support can be considered a very positive signal. Usually, when confidence in the market wanes and small panic sales begin, such solid support zones come into play and work like a floor that holds the price. In technical analysis, the confidence provided by such support zones is of great importance not only for short-term traders, but also for medium and long-term investors, because these levels are strategic turning points where a bullish move can begin. A look at past price action shows that this support level has been hit many times before. Each time buyers have stepped in and pushed the price up, but now it is about to be tested again. This means that the support zone will once again test its validity and strength. However, since the reactions received from this support level so far have been quite strong, there is a high probability that a similar movement will occur this time. A bounce from this area, especially with the increase in volume, could accelerate the upward movement of the price. Many traders and technical analysts interpret reactions from such clear support zones as confirmed reversal signals. This may indicate that the price is starting to lose its downward momentum and that buyers are back in control. In addition, such reactions from support levels also create a significant shift in investor psychology. Because in a downtrending market, a bounce off strong support gives traders hope and encourages them to take positions. This support line is not only a technical level, but also a psychological boundary. Many traders call it the red line because of the strong belief that the price should not go below this level. Holding the price at this level is valuable not only from a technical point of view, but also for the confidence of market participants. If this support works, and the price reacts upwards from this level, this could lead to both new purchases and the protection of existing positions. In addition, a bullish move upwards from this support level could push the price back towards its previous highs. This could potentially lead to a large price increase. In particular, an increase in volume, especially in such return movements, indicates that buyers are entering the market in a really strong way. This sets the stage for the price to move up more steadily. Therefore, a bounce off this support zone could be the start of not only a short-term, but also a medium to long-term positive trend. However, although price movements in the markets do not always repeat in exactly the same way, historically, similar patterns have been known to repeat. Therefore, support levels that have worked before in technical analysis tend to continue to work in the future. This red-line support zone, which price is currently approaching, seems to have proven this many times in the past. This gives traders extra confidence and provides an important reference point for those looking to open new positions. To summarize, this support zone below the price indicated by the red line is of critical and strategic importance. The RSI indicator is one of the most powerful technical tools for assessing the momentum of price movements and identifying overbought or oversold conditions. Currently, the RSI has reached an important zone where price reversals have occurred many times in the past. This is an area where the market pauses for a breather and begins to change direction to regain strength. In previous analyses, when this level was reached, the RSI turned its direction upwards and there were significant recoveries in price movements. Now, the RSI, which is back down to the same levels, may have started to give signals to investors heralding the possibility of a new uptrend. It is no coincidence that this level is a reaction zone. The RSI indicator becomes a common reflection of investor behavior over time, and repeated reversals at such levels indicate that investor psychology is changing in these areas. This reaction area that the RSI has now reached may be acting as a backdrop, where both buyers are re-engaging and sellers are losing ground. In particular, strong rallies from these levels in the past have made this area a hidden support. RSI reaction areas are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.